All right, what's up, y'all? Uneducated Yogi here with One Family Investing, where we learn, we invest, and we make profit. All right, that's what we do here. I'm glad that y'all are here. I got some good news. We're gonna have a watch party today, okay? But I want to go over a little bit of the SoFi option trade that we have right now. Um, we've been following this. If you've been following the last couple videos, um, I've been going over this because this is what I want us to be able to do together. I want y'all to be able to get you a Robinhood account or get your Charles Schwab account or a Trading View account and be able to do these things. There's other brokers, Moo. So there's different ones. But anyways, I want y'all to be able to do that. So here's the thing. This has been a roller coaster right now because the SoFi stock, it was up not so long ago. Make that a little bit bigger for y'all. It was up not so long ago. Let me put me somewhere else real quick. Maybe up over here. Yeah. Um, okay. So it was up not so long ago. Remember in the last video, I put this yellow line here to signify when we break even with the option. So this is TraderView. We're in a 3-minute chart. So if I would have got my lazy behind up, I want y'all to see this. So I should have got up. There was something telling me to get up, and I should have got up. I didn't. And let's just say I would have caught it around, well, if I was up, I would have caught this right at open. So right at open, it would have been going back and forth up between here and here within the first 3 minutes at least. Okay. So at minimum, 224, 24, 39, 20, 24, 40, 24, 40, and at max 24.89, 24.89. Actually, I don't know why I did that. I mean, the high and lows is up here. 20. It's in the, well, y'all can't see where I'm pointing, but anyways, it's up there anyways. Um, if y'all look at it, it says SoFi Technologies Inc. and then the Nasdaq. You see that in the top left, and then it has OHLC, and it has those red numbers. The O is for open, the H is for high, the L is for low, the C is for close. So the high and low, the H and the L. So the high was 24.90 and the low was 24.40. Okay, so we have our numbers. So I'm gonna go 24.80. Let's say I would have caught at 24.80. So what I can do is I can go in here and go to simulate my returns. So this is through Robinhood. I'm on the share, the option trade that I made. So let's say 24.80. So it was at 24.80. If I would have caught it, so if I would have been up, I would have been able to close out that trade at 24.80. See this down here? It says 24.80. And the highest was 24.90, but I would have gotten the 128. It would have been $128 return. So just so we can see how that would have worked. So I would have, made my money back and made some profit because our break even point was 24.22. If you remember this yellow bar right here, 24.22. So our break even point was 24.22, and it went to 24.80. So, I'll be paying attention more closely because I want to close this out because I want to do another trade, but I'm taking it slow. I'm showing y'all what I would literally do if I'm getting into something. So I've been studying options for a while, um, and I've been getting my fingers wet, so to speak. I studied what candlesticks were, so I did this already before. You guys are seeing me come in after doing a bunch of research and kind of getting comfortable with stocks in general. So, but buying and holding is way different than this right here: swing trading and day trading. So, just putting that out. So I've already studied candlesticks. I've already started playing with support and resistant lines as I've been sharing in these videos. If y'all go back and watch them, or I mean, I can redo them as y'all are watching these. Just say something in the comments, or and then I'll go over something. Again, this is a journey together, but you know. So I've been studying it already. So you guys are catching me at a good place. So if you have no background, then that's what I'm doing this channel for. I'm doing this channel so you can come in with no background, and then hopefully I can help you speed through a lot of years that you don't have to uh, use to go through all the information on YouTube. So that's the plan here. So would have made that back. So that's neither here nor there. I'm going to start paying attention more closely on time. So unopened is the best time to watch the stocks to see what's going to be happening for the day and what could be. So we're going to leave that there. So I wanted to go over that, and then I wanted to share something about the market because remember, this is about we learn, right? So I'm watching this video right now and I realized how useful it was. And instead of me watching it twice, we're just gonna watch this together. So I'm gonna, I'm only 7 minutes in.
You gotta be flipping my flapjacks, folks. We have some stocks just
So we're gonna watch this video. This is Jeremy with Financial Education. This is his channel. Uh,
continuing to make in.
yeah, so this is the type of research and watching that I do. So here we are. Let's just watch this together. I'll make comments and stuff as we're watching it probably.
Insane moves here. Celsius Holdings. Look at this one here today. Closed over $60 a share, now up 150% on this one, up $147,000. Congratulations, anyone out there who holds Celsius Holdings. This stock is unbelievable. Up almost another 7% here today, up $15,000. Wow. You're looking at ELF. Continue to make another huge move, another 6% plus move here today. This stock was $93 when their earnings came out. People panic sold this one all the way down to 93. You know how long ago that was? Less than 2 weeks ago. Less than 2 weeks ago, people were willing to sell at 93. Now people are willing to buy at 123. And nothing fundamentally with the company has changed in this, since that day. Like we had already known the earnings and everything, and yet people are willing to pay another 30% premium versus where they were panic selling out of. Unbelievable. And think about this a little bigger, right? You see a 30% move like that. That's what people usually hope to make in 2+ years. 2+ years in an index fund. And ELF has given you that in less than 2 weeks. Unbelievable. SoFi continues to show momentum. This stock closing well over $24, up another 2% here today. Now we're up 191% on SoFi shares, up $79,000. Meta, on the other hand, hey, Meta, this is not allowed, okay? Meta went down here today, down 2%. Three core subjects I want to speak about in today's video. The first one is I want to talk about Celsius, SoFi, ELF. What's going on with these stocks? Where are these stocks headed?
So I wanted to share this video just because of that. That's a strong opening to share that the market, like, so when things are going up and down, like if the market is going crazy, good or bad, the important thing is to understand the individual companies, because as an investor, we're investing in a company. We're not investing in the overall market. So even though the overall market could be showing signs of something, an individual company could be doing something different. But one of the reasons I like Jeremy is because like he pays attention, he does really nice research, and he shares it for free here, um, where he's getting the research from, and all the numbers straight from the company's research and resources that they share with investors. So I've been learning a lot, and you're going to be learning a lot right now, because that strong opening, like he went over each company, he told us why something like the that's SoFi, no Celsius, that Celsius trade, um, a couple, no Elf, a couple weeks ago, they they traded it down, and then they now everyone's willing to buy it for a higher price. um, and that's why we don't panic when other people panic about things. When we're investing in something, we trust it enough to understand, and we know it enough to understand where it's going to be going. And if we don't, then we shouldn't be investing. So let's keep going. It was just a nice opening. It was such a nice opening. uh, it gives us three stocks we can invest in right now if we wanted to.
Headed next. Okay, these ones are just continue to show momentum, momentum, momentum. When is it going to end? Where are they headed next? We'll speak about that in this video. Meta is the run over in regards to Meta. That stock has been on a great streak. Is the run over? We'll speak about that in this video and what's going on with Meta stock. And a third thing we'll talk about in this video is hedge season has started for me. I just placed my first hedge position, in a long, long time, basically, and we'll talk about why I went ahead and did that. I think that's an important subject to talk about. I'm away again. I'm not in Vegas again. I'm just in a quick trip to Arizona right now. We have a family member that is in the hospital. 6-month chart of Celsius. The stock, each and every one of you, okay?
I just fast forwarded because I already saw that part. He's just saying he's in Arizona taking care of family.
Listen. 6-month chart of Celsius. The stock has gone up 166% in 6 months. I mean, it feels like 6 months goes by in a snap of fingers. It's like, oh my gosh, right? And 166%, that's ridiculous. When you consider, right, it's done that in 6 months. If you're in an index fund, you would hope to make 167% over probably 10 or 15 years in an index fund. And Celsius is giving you that return in 6 months. It's insane, right? So the question you have to ask yourself, okay, a stock like this just gave you 10 to 15 years worth of index fund gains in a 6-month span. What changed with the business? Like, there must have been something fundamentally really changed in a massive way for this company, right? Well, if I take you back to 6 months ago, what happened? 6 months ago with Celsius, there was a lot of growth concerns from Wall Street and from investors. They were scared about revenue growth of this company. There was also margin concerns and where the margins of Celsius were headed. Additionally, there were market share concerns. How much market share is Celsius going to be able to get of the energy drink category or not? Additionally, there was Pepsi deal concerns as well. From when they did the Pepsi deal, Pepsi ordered way too much inventory. They boosted the numbers way up, way too high in 2023. So it was all those questions about that, okay? And then additionally, there was energy drink category concerns as well, because we saw some negative data in regards to the energy drink category. So it was like you just had an onslaught of all these things going like negative against Celsius in regards to people viewing the stock, right? What have we had since then? What has cleared up in the past 6 months that also makes everybody want to go buy the stock and say, I wasn't willing to pay 20 something dollars for it 6 months ago, but you know what? I'm willing to pay $60+ for it now 6 months later, right? Well, we no longer have category fear. Now people are confident again in the energy drink category in general. They're confident that the compounded annual growth rates of the energy drink category is going to be very strong, and that's a fundamental change in regards to that. So that fear, it's gone now at this point in time. Next fear was around revenue growth. There's no fear there anymore. Celsius just reported $739 million of revenue. That compares to $401 million of revenue in the same quarter last year, which, if my math serves me correctly, that's like 80% plus growth for Celsius here. So there's no longer fear about can Celsius grow the top line. No. That's gone now at this point in time, okay? Additionally, If you talk about market share and where Celsius's market share is, there's no longer fear around that. You know why? Because in their latest quarter, they just went to a 17.3% share of the US energy drink category, up 180 basis points versus a year ago, led by demand for zero sugar and functional beverages. And my guess is, where is this where's this market share number going for Celsius now that they have the Alani brand as well? My opinion is the market share for Celsius is going to 20+% long term. That's my opinion. They will be a 20% plus market share in the United States when it comes to energy drink category. And remember, international and basically almost every important international market you would look at for the energy drink category, they're like single digit percentage. Like they're like a baby international right now. And believe me, based upon my opinion on studying this energy drink category for a long time. I used to be an investor of Monster Energy a long, long time ago, and even recently as well. I don't have any shares in Monster right now, but I know this energy drink category very well from my days at Walgreens, my days at Quick Trip and management. I know this category very well. In my opinion, international, they will be going to double digit share international as well. And that's where you're going to see the biggest revenue growth opportunity. 2026, 2027, 2028, 2029, 2030 will actually be international. It's the same thing that happened with Monster. Monster grew massive market share in the United States, and then it was all about growing huge in Europe. Then it was
Okay, so that's one of those another like that's those things I'm talking about. His research and then his mind about the future growth, like what he just shared. It has a 17.3 market share of the energy drink sector in the US. And if we think about it, he's saying right now it's single digits internationally. So he's saying because Celsius is such a new company, it's still growing and it's still building. I don't know how new they are, but newer um, in the energy drink sector at least. I don't know if they do anything else, but um, imagine when those digits goes into those double digits. So if you invest now, when they get a larger market share, the stock naturally grows because people are seeing this company grow so much, they want a piece of it. And then that's when the Wall Street people, that's when they're gonna go in even more, or these, you know, bigger investors like you and me, the Cappy Woods, it's like Catherine Woods, um, you know, Warren Buffett, even who knows, like, but these big investors, um, like you and me, that's when they'll get in too, or they'll probably, well, some of them they'll get in beforehand, but yeah. So this is the type of research that we want to do, and this is the type of stuff we want to know where we want to put our money, and then we dive a little bit more deeper later, whether it's like a growth stock, dividend stock, or anything like that. But this is a wonderful stock from what it sounds like, right? And then you can go in and do your own research. You go in and start looking up some of these numbers. But this is what I do, and this is like one of the ways I actually make a lot of my decisions. Not a lot of my decisions, but make some of my decisions because I do this and then I cross reference it with other stuff. I don't just listen to one person and then just make a decision. I mostly listen to myself and then I cross reference it with other people. But then, like for Celsius, for instance, I wasn't thinking about Celsius. Jeremy put that stock into my viewpoint, and then I was like, yeah, I actually do understand. I know that energy drink, and I have seen how it like just just like took off. So I'm not missed from understanding like the growth of Celsius. So I'm already trusting myself in that way. I'm not just going like, oh, I heard him. I have no idea about it, and then I'm just trusting it. No, like I heard it, I see what he means, and now I'm listening to his research, and then that's gonna help me decide if I want to put in something right now or not. And and if it goes with my strategy. Right now, my strategy, I really want to grow my SoFi. I want to grow whatever stocks I have right now to higher amounts. That's what I'm focused on. But if I didn't have those stocks, maybe if I'm looking for one, maybe I would then add this one to my portfolio because I'm looking to add one to my portfolio. So that's how I would think about that. And Jeremy, by the way, wonderful person. He has this group right here. It says learn how to build strong, scalable portfolios. I'm not a person who's trying to hog everybody's attention. I really want everyone to grow, and this is a resource center, and a community. So what I would say is, if Jeremy, there's other people who I'm going to be introducing. I'm going to get better at introducing more people to y'all, um, but if somebody interests you, you know, follow them. Do not follow more than two people though. Like a lot. Like pick. I would love for y'all attention to be here, and then pick one more person and then follow them deeply, or pick two other people and follow them deeply. Don't try to follow like three or four other people and things like that, because people teach different strategies. And what I've learned is having multiple strategies in our head that can actually slow us down from moving forward, because you have so much in there that you can choose from. It's better to trust somebody. Like, okay, I trust this person. I have an infinity with this person. Let me follow this person and do what they say. Get good at one thing and then move on. Um, Someone asked Abraham Lincoln uh, if he had 4 hours to like cut down a tree, how would he use his time? Something like that. He said, I would use 3 hours sharpening the knife and then 1 hour to cut it. And what he's saying is like, just do one thing. Like, focusing on one thing is better than focusing on a bunch. And I think I was thinking of the Bruce Lee thing, and I mixed it up with Abraham Lincoln. But Bruce Lee, he said, it's better to learn do one kick 1,000 times than to learn 1,000 kicks, 1,000 kicks and doing it one time or something like that. You guys know what I'm trying to say. But focus on one kick. Bruce Lee is saying one kick. Get this one perfect thing down. So focus on one thing first, and then move on to the next thing. Okay. Sorry, I went on that little rant, but okay. Follow one person, two people at most. Let's keep going with Jeremy. Got some good information here.
About growing outside of Europe, in Asia, in Latin America, everything like that, right? That's a game Celsius will be playing for the next 10 plus years, okay? Now, additionally, margin fears, there's no margin fears around Celsius anymore at this point in time either. Because you think about this last quarter, all the tariff drama, what's going to happen with aluminum pricing, blah, blah, blah. And Celsius still came through with extremely strong gross margin of 51.5% despite all the drama, right? And, this was the first full quarter really of Alani being in there. And so you usually have some hits to margin that are usually negative whenever you have a new brand, that comes into your space as well. And you have to, obviously distribute that product and do things differently. It's usually some one-off hits, things like that to your margins, and Celsius just motored right through, right? Now, additionally, Pepsi, they made that major investment into Celsius, several years now ago at this point in time. 2023, they went too crazy with the ordering and into the first part of 2024, and then there was a come down of that, and it was dramatic, and it hurt Celsius's growth numbers and made Celsius look like it was no longer a growth company when it is in reality, right? They're no longer being held back by that. Celsius is, from my understanding, Pepsi's cleared all the inventory, so that's not even an issue anymore at this point in time. So the Pepsi problem this stock had second half of, really a lot of 2024 and into maybe the very beginning of this year, that's old news now at this point in time. That's no longer an issue for the company, right? Now, in regards to stock price and where the stock price of Celsius is headed from here, okay? Listen. If you think about where the stock was, we can call it back at the beginning of 2024. This was a stock that was getting close to $100. It was pushing, $96 or so, right? Think about the company now versus then. This is a way, way more exciting, better business model, in my opinion, with not only the Celsius brand, but the Alani brand as well. The market share they now have, the penetration now they have, the ability to grow Celsius internationally, and Alani in the US and internationally. Like, this is a way better, in my opinion, safer company now than it was back when that stock was hitting 90 plus. So in my opinion, that stock's headed to 100 plus. either this year or next year, in my opinion. And not every day is going to be up, not every week's going to be up, but the trajectory will be up and to the right, in my opinion, in regards to Celsius, because the numbers are just going to keep coming through, in my opinion, stronger, stronger, stronger. And do you know what's going to happen? I'll tell you exactly what's going to happen. Every single person that wants exposure to growth in the drink category is going to want a piece of Celsius, and they will buy the stock, and they will buy the stock. And until Celsius comes down to, let's call it single digit growth rates in regards to them, like, the stock will continue to find buyers. And the holders, like, what's our incentive to sell? This is something important you guys got to understand. Okay, listen, before we get into SoFi, ELF, Meta, hedging, all those sorts of things, listen. Where's my incentive to sell my Celsius shares in the public count? I think it's up to my fourth biggest position in the public count. I think I have, 4,000 shares of Celsius in there. Where's my incentive to sell Celsius right now? We're at a company that's still so early days in the international expansion. They're still growing rapidly in the United States. They got the Alani brand, one of the fastest growing, if not the fastest growing brand out there of major brands in the energy drink category. The margins look great at 50% plus. The profitability should skyrocket in 26, 27. They got the Pepsi, hookup there, right? So Pepsi's very incentivized to do everything they can to make sure Celsius and Alani are successful over the next 5, 10, 15 years. Where's my incentive to sell Celsius? I just don't have one. And so that means you're going to have stubborn longs who aren't really interested in selling, and you're going to constantly have people flooding in to buy this stock, because it's, where else are you going to find these sorts of growth rates in the drink category, period? You're going to look at Coke, Pepsi, Keurig, Dr. Pepper. Those growth rates are like, those businesses had trouble even growing at all, right? Monster growth rates have obviously come down immensely over the past 10, 15 years. So you're not, like, Monster's not some major growth name nowadays, right? That's just kind of like a stable, good, growing company. Celsius is the one that you look at and you're like, that's the growth beast. And so that's going to continue to attract that money that wants to go into a growth name, right? Now, next up here, let's talk about SoFi. SoFi stock, very important one to talk about here, where SoFi stock is headed, why it's seeing momentum, all those sorts of things. Before we get into that, if you are somebody that wants access to all of my premium courses, that's including Becoming Master of the Stock Market, Millionaire Playbook, Stock Options Mastery, How to Hedge, Dividend Investing Mastery, Financial Statements Mastery, My Valuation Mastery, pin comment down there, click on that. You can fill out a form that will allow you to essentially apply to join my private stock group, which, when you're part of my private stock group, you get access to all of my courses. Additionally, you get access to the private Discord chat with the 6, 7, and 8-figure members. Additionally, you get access to 1000xstocks.com now. And additionally, you get access to see the moves I'm making in my nearly $4 million Fidelity account each week, okay? And once you join us in there, we'll send you your Steel membership cards in the mail to your house. Yes, baby, the 1000x card and the private stock group membership card, okay? Alrighty, guys, that will be the pinned comment down there to take you up to a higher level than where you're at.
Okay, I just want to say something. I'm just letting that probably play that one time, maybe another time, maybe a couple times. I ain't gonna let, the promotion go on like that each time. But I wanted to let that play because I did a horrible job sharing his product earlier. So, but that's his group. And um if anyone joins, I just say just let me know. Just let me know, because then we can just the idea is to share the experiences so that we can help people find other nice communities. Okay, that's why I'm not here to, like, hog anyone's attention. No, but let's stay together and, like, grow what it means to find nice communities, or like, even while we're going through these different groups, we can help each other through these groups. Like, let's say one of you guys join his group, maybe you might find somebody within this community to partner with to go through it together. Maybe it might feels like a nice team, like a, I don't know, battle buddy system. I was in the military, battle buddy system to go through it. I don't know. That's the words I'm using. But anyways, I hope y'all get what I'm trying to say. Okay, but anyways, that's his. And again, I'll be putting the link of this video in the description as well.
SoFi Technologies. So this stock closed in 24 plus here today. Stock's up a shocking 240% in the past year. Like this stock, you can't even call it red hot. It's burning hot. It's like a blue flame. That's what I would call it in regards to SoFi. It's like a blue flame stock. Insane the momentum the stock is seeing, right? Now, here's the thing you got to understand, okay? When you look at, let's say, the public count, I have 5,000 shares of SoFi, sitting on 191% gain, sitting on $79,000 of gains, okay? Listen, basically all those gains have come in the past year. The past year. So this is still early in regards to the move for SoFi. Like when you're talking about great growth stocks, they don't make a 1-year move. They usually make 3 to 5-year moves at a particular time. And then they take a breather or they go through some sort of short-term crash, something like that. This stock's only really been red hot like this, well, not red hot, blue hot like this for a year. And so once again, usually great growth companies put together several years of a major stock price move. For instance, if you look at Palantir, which I'm up 2,272% on, right? That's a several year move. Palantir bottomed Q4 2022 and started to head up from there, right? And Palantir bottomed, it was like, oh gosh, Palantir, I think it was $5 or $6 at the bottom, right? Then it showed momentum and made a big run to 20. Then it made a big run up to the kind of the $50 level, right? From there, it made a big run up to the $80 to $100 level, and from there, it made a big run all the way up to 180 plus, where it topped at recently, right? That's a several-year move. That's what great growth companies do. So if you think SoFi is in the early innings of a major growth cycle, we still probably got another year, if not 2 years, of SoFi stock price momentum before we'll have a major slowdown and potentially a crash in the stock. Then that's just natural what happens, right? Like maybe SoFi runs to $60, right? And then has a crash down to 40. It's not crazy to imagine. Like this happens all the time with great growth stocks, right?
I just want to say how crazy this is. I just did the numbers for this man. Um, so this is Palantir. He owns 1,000 shares, and his average cost is $7.34. So this position cost him $7,340, y'all. $7,340, and he is up this much. Okay, this is the total position of this account. So if you take this 174 minus 166, oops, 174 minus 1, yeah, got about $8,000 in there. That is crazy. Yeah, that's the power of understanding this stuff and seeing the long-term vision of things.
Now, in regards to SoFi here, right? The thing you got to understand, betting on SoFi is like trying to bet on the next JP Morgan, right? Where if you think about how dominant JP Morgan is in the marketplace, how big that company is, people are fully convinced that SoFi has an opportunity to be the next JP Morgan for the next, 10, 20 years. And when I look at SoFi, I'm like, it has a lot of the ingredients and it has the sort of growth rates that if you run these numbers out, you're like, oh my gosh, like if we talk about it 10 years from now, like SoFi could be a banking giant, right? Now they got to get through the next recession or two that we'll have. We will have those do happen. And when you run any sort of banking related company, right, which this SoFi is more than a bank, it's fintech, right? But when you run any company in the financial space, the biggest thing when it comes to a recession, get through to the other side with a good balance sheet, and you'll be able to capitalize on the next economic cycle in a major way, right? And so a bet on somebody like a SoFi is like betting on Amazon 20 years ago, where you could have bet on Walmart, right? Walmart is like JP Morgan, like it's a dominant company, going to continue to be relevant for decades to go in the future, right? Going to continue to be a giant. But there's this other company that is pretty darn exciting and is going to put up extraordinary growth rates that are going to completely dominate the other company in regards to growth rates, right? And so that's my opinion on betting on SoFi versus betting on JP Morgan. JP Morgan's like betting on Walmart 20 years ago. There's nothing wrong with that. Great company, great business model, going to continue to be relevant for decades to go in the future. But SoFi's an Amazon-like opportunity, right? Now that brings me to the next point around SoFi. You got to understand, there's some stock. You guys ever seen the movie Limitless with Bradley Cooper and Robert De Niro? You ever seen that movie before, right? And he has this limitless pill, and it like allows his brain to like thinks so much differently than everybody else, and essentially like he's like a higher, almost becomes like a higher being, like a higher life form, because his brain just is operating at such an advanced level, right? There's some stocks that are like that limitless pill, okay, where they're I would call it like it's probably 0.1% of stocks, or maybe even 0.01% of stocks have this ability essentially to, they're not judged by the traditional things you judge companies by. Traditionally, you're going to judge companies by P ratios and forward P ratios and price to sales ratios, and like that's what it is for 99.9% of stocks, and that's why I teach you all that stuff that matters, right? Running projections. But there's like 0.01% of stocks or 0.1% of stocks that basically are limitless. These stocks do not run by the traditional fundamentals. They run by the future. Stocks like Tesla come to mind. Like Tesla's entire public life, since that company went public back in, what was that, 2010, 2011, company's always been a limitless stock. It doesn't run off traditional P ratios or forward P ratios or price to sales ratios. None of that. For that stock, it just doesn't matter. People believe, it's a game changing company that's going to be, nowadays they're talking about robots and self driving cars and all these different things, right? If you look at Palantir, Palantir's been at a ridiculous valuation for quite some time. And even when that stock was $6, people said it should be $3. Palantir does not run by the traditional, usual things you would run a stock by, right? Amazon, up until really the past few years, was also one of those limitless stocks. Amazon never ran on traditional fundamentals of like a P ratio, a forward P ratio, right? And so there's a certain amount of stocks that they're limitless. And I look at SoFi as one of those very rare stocks that it will never run on traditional P ratios, or I shouldn't say never. It won't run anytime soon on traditional P ratios or anything like that. Eventually, all companies will, in the end, be judged by P ratios and forward P ratios and price to sales ratios. That will happen in the end game for all stocks, including Tesla, including Palantir, including SoFi, including everybody. Okay, but you can go through 10, 20 years where it just is irrelevant. People are buying that stock because you are the future, and that's the way SoFi is. SoFi will not anytime soon run on traditional metrics like a JP Morgan would be judged, or Bank of America or Wells Fargo. People will continue to buy up SoFi stock for a long time to go in the future, as long as they make it out of this to the other side in regards to recessions, keep putting up great growth rates. People will buy that stock continuously, regardless of valuation, regardless of anything else, right? And here's the other part you're not considering. Okay, listen, people that are holders of the stock will continue to hold the stock regardless of the short-term trailing 12-month P ratio and the forward P ratio. They'll continue to hold the stock and not be interested in selling it, because they're like, why would I sell the future? Why would I sell the next JP Morgan when they're not the next JP Morgan yet? So that's just something to kind of keep in mind there. And it's very few, man. It's very few stocks I can think of off the top of my head that are true limitless stocks. It's like 0.01% of stocks in the market, but they run different, and that's SoFi. Next one up here, let's talk some ELF. Then we'll get into meta. We'll talk about hedging season starting, why I'm doing that, things like that. Okay. So here's the deal with ELF. Okay, listen. The sales increased for the company 9% last quarter, right? Kind of a slow, sleepy quarter for ELF. ELF's usually a strong, double-digit growing company. They had a very tough comp to comp against. They had all the tariff drama to factor in. They had some retailers that probably underordered, in my opinion, right? Based on looking at some of the trending data. So here's the deal. Road's closed now, right? So the up quarter will be the quarter, and numbers start to hit ELF. Oh my gosh. Oh my gosh. ELF's about to show skyrocketing growth rates, right? Once again, just like Celsius has. So the thing you want to understand that's going on with ELF right now is people are front running that, because they know ELF's growth rates are about to skyrocket again. Plus, you're going to likely get the core ELF brand start to post some very impressive numbers, probably Q4, starting in Q4 of this year, and then especially going into 2026, because the comps will get a lot easier. They've been working.
Okay, so all that slowing down stuff, that's the sign for me to say let's go ahead and end our watch party. I'm gonna get this on YouTube for y'all on here if y'all watching it. So I hope this is enlivening and you're liking this. And again, I'm gonna put, you can finish this video. So Jeremy, he's gonna get some views, um, and say, hey, uneducated yogi sent me here, or One Family Investing sent me here, just because I think eventually down the line, when I can get regular in this, again, I'm traveling and moving around and stuff, and I haven't got a whole system down. But I want to interview people like Jeremy and the Earn Your Leisure Bros, um, Swaggy, Wall Street Trapper. I want to interview people like that and just bring them on too. So again, Resource Center. I appreciate y'all for being here. Again, I'm going to keep an eye on our SoFi situation, and is, I wish I was up this morning. I probably could have exercised this right here. I probably could have done something with it, but um, yeah, it is what it is. So that's it for today. I think um, I could go over some other stuff, but it'd be in another video. Thank y'all for being here once again. One Family Investing, Uneducated Yogi. We invest, or we learn, we invest, and we make profit. All right, man. Love and peace. I'm out.